I've been watching markets and watching men long enough to know that most of them don't stand a chance. Do you know why? Because the market doesn't beat you. You beat yourself. That's the truth of it. A man can sit in front of a tape for 10 years and never learn a thing if he doesn't first learn himself. Now, ask yourself, are you one of those who looks for tips, for shortcuts, for the easy road? If so, you're already in the 99%. The reason most traders fail is simple: they can't wait. They can't sit still. They're itching to trade when there's nothing to trade. A good trade is like a good horse. You wait for the right one to come along. Most men, they bet on every nag that runs down the track. And when you spread yourself on every move, you end up in the gutter. Doesn't that sound familiar? Have you ever taken a trade just because you were bored? I'll tell you something you won't hear from the brokers or the bucket shops. The market pays the man who waits, not the man who acts. The public wants action. They want the thrill, the gamble, the feeling of doing something. But the market isn't a casino, it's a place of patience. You make money by sitting, not by trading. And still, what do most men do? They trade too much, they trade too often, and they die by the very hand they force. Tell me, have you ever had a winner, then turned around and gave it all back in the very next trade because you couldn't resist the urge? Another thing, most traders can't take a loss. That's where they fall. They marry a stock. They fall in love with their position. They think the market owes them something, and they sit on the wrong side while it eats them alive. I've seen men lose fortunes because they wouldn't admit they were wrong. The first loss is the best loss, remember that. A man who won't take a small loss is the same man who ends up taking the big one. And I'll ask you, have you ever held on just hoping the market would turn in your favor instead of cutting it clean? The great majority think the market is against them. They think some operator, some big insider, is pulling strings to make them lose. That's foolishness. The market doesn't care about you or me. It isn't personal. It's just a mirror that shows you your own weaknesses. Greed, fear, hope, those are the things that rob you, not the ticker. When you understand that, you begin to see why almost everyone fails. Do you catch yourself blaming the market when it's really your own doing? Now let me tell you about hope, because hope is the death of a trader. A man hopes when he should fear, and he fears when he should hope. That's backwards. When you've got a winning trade, that's when you should hold with hope. Let the profit run. But what do most men do? They get nervous. They grab the small profit. They can't stand to see the tape wiggle against them. And when they've got a losing trade, that's when they hold on and hope, praying it comes back. Do you see how upside down that is? Have you ever cut a profit short but let a loss grow teeth? I've always said that the big money isn't in the buying or the selling. It's in the waiting. That's where the crowd misses it. They think trading is about always being in the market, about always having a position. That's the disease. You don't have to trade every day, any more than you have to bet on every horse. But try telling that to the 99%. They don't want to hear it. They want excitement. Do you think you can resist the temptation when the tape is jumping? Let me tell you about tips. The graveyard of traders is filled with men who traded on tips. Someone whispers in their ear, and they think they've got inside information. There are no good tips. The only tip you should trust is the action of the market itself. The tape tells the truth if you're willing to listen. But listening takes discipline, and discipline is rare. How many times have you followed someone else's tip instead of trusting your own judgment? And then there's the matter of capital. Most men are undercapitalized. They bet too big on too small a stake. They let one bad move ruin them because they had no cushion. They think they can turn a small grub stake into a fortune overnight. That's a gambler's dream, not a trader's plan. The market demands respect, and it punishes the man who overreaches. Have you ever risked more than you could afford, just to chase a quick win? Discipline now, that's the word that separates the 1% from the rest. But most men can't live by rules. They don't even bother to make rules for themselves. They drift along, trading by whim, trading by mood, trading by gossip. And every now and then, the market throws them a bone. That bone keeps them hooked, keeps them believing they've got what it takes. But in the long run, the undisciplined man is sure to fail. Do you have rules you actually follow, or do you break them the moment the market tests your nerve? Another trap is the desire to be right. Men want to be right more than they want to make money. They'll argue with the market. They'll stand their ground, and they'll go broke proving themselves. The market doesn't pay you for being right. It pays you for being on the right side. And there's a difference. How many times have you let your pride keep you in a losing trade because you couldn't stand to admit you were wrong? The truth is, the average trader isn't cut out for it. He doesn't have the temperament. He wants certainty, and there is none. He wants control, and the market gives none. He wants reward without risk, and that's a child's fantasy. The 99% fail because they're looking for something that doesn't exist. They think there's a secret, a formula, some hidden trick. But there isn't. It's patience, discipline, and self-knowledge. Do you really think there's a magic system that will do the work for you? And then comes overtrading. That's the killer. The more you trade, the more you expose yourself to mistakes. Commissions, slippage, bad judgment, they pile up. The man who trades all the time is the man who feeds the street. The professional doesn't overtrade. He waits. He chooses his spots like a marksman. But the crowd fires wildly, and they wonder why they miss. Have you ever looked back and realized that most of your losses came from trades you didn't even need to take? Another reason men fail is they don't keep records. They don't study themselves. They forget their mistakes, so they repeat them. The successful trader treats every loss as tuition. He pays for the lesson and learns it. The failures don't learn. They think the next trade will be different just because it's new. But the market punishes the same ignorance again and again. Do you keep track of why you trade, or do you just trade and forget? There's also the matter of environment. Most men surround themselves with noise, news, opinions, chatter. They can't hear the market because they're too busy listening to everyone else. A trader has to learn to stand alone. He has to trust his own reading of the tape. That's hard, because it means taking responsibility. The 99% would rather blame someone else. They'd rather say they were missiled. Tell me, do you stand on your own judgment, or do you look for someone to confirm your decisions? And finally, there's greed. Greed blinds men. It makes them double up when they should scale out. It makes them chase when they should wait. It makes them forget that preservation of capital is the first rule of trading. Greed whispers just a little more, and that little more is what takes away the whole gain. Have you ever had a winning trade only to give it all back because you couldn't resist holding for just a little more? Most traders lose because they can't sit still. Patience pays, action costs. That's the truth in a single line. But let me tell you why it matters and why it breaks almost every man who comes into the market. Trading isn't about constant action. It's about waiting, watching, and striking only when the odds are tilted your way. Yet the great majority of men who sit at a ticker, or these days at a screen, cannot bear the thought of doing nothing. They come to the market for excitement, for the thrill, for the movement. They think the secret lies in activity, but the market is the one place where too much activity is almost always fatal. Do you ever feel restless when you're flat, like you've got to be in a trade just to feel alive? That's the trap. The difference between the small minority who make money and the vast majority who don't is this: the winners know how to sit. They can stand aside when the market is unclear. They can wait days or weeks for the right setup, and then they can sit even longer once they're in a winning trade. That ability to do nothing both before and after entering is where the real money comes from. But almost no one has the temperament for it. They're too eager, too impatient, too afraid of missing out. You see, impatience doesn't just make you enter bad trades, it makes you exit good ones. That's a double loss. Do you cut your winners short because you're scared the tape will turn against you? A man who cannot wait is like a gambler at a card table, playing every hand, whether it's strong or weak. The smart player folds more than he bets, waiting for the rare times when the odds stack heavily in his favor. But most traders can't fold. They've come for action, and action they'll get, even if it costs them everything. That's why you see them leaning over the tape, grabbing at every uptick, chasing every rumor, buying when they should wait, selling when they should hold. And each trade chips away at their capital until there's nothing left but lessons they never learn. Think about it. How many times have you put on a trade not because you saw a real opportunity, but because you couldn't stand the boredom of doing nothing? Patience isn't glamorous. Nobody brags about the trades they didn't take. Nobody goes home to their wife and says, "Darling, I made nothing today, and that's exactly why I'll still be in the game tomorrow." But that's the truth. The best traders brag, not about their gains, but about their restraint. They know that opportunities come in cycles, and most of the time the market is just noise. You don't make money trading noise. You make money by being silent, by sitting on your hands until the market shouts at you so loud that the trade becomes obvious. Do you listen for those rare shouts, or do you let the whispers push you into bad bets? Impatience comes from the human need to feel in control. Men think if they're trading, they're doing something, and if they're doing something, they're in command. But the market cannot be commanded. You can only align yourself with it when it offers you the chance. The more you trade, the more you expose yourself to mistakes, to losses, to commissions and slippage, and the wear and tear of nerves. The patient man avoids all that. He bides his time, he conserves his ammunition, and when the target appears, he takes his shot with full force. The impatient man fires at shadows until his gun is empty. Which one are you? Now, here's the hardest part. Waiting feels like weakness. Doing nothing feels like cowardice. But it's the strongest thing you can do. It takes more nerve to sit and watch than it does to jump in. That's why so few can do it. The crowd can't stand the silence. They need the noise of action to feel alive. But markets don't reward noise, they reward discipline. And patience is discipline in its purest form. Do you have the strength to look like a fool to others, sitting there idle while they all rush around, or do you join them in the scramble because you can't take the heat of being still? I've seen it time and again. Men who had the right idea, who bought the right stock, but sold it too soon because they couldn't sit through a little hesitation. They made a point or two when they could have made 10. The market will test your patience by shaking you, by throwing small reactions and pullbacks in your face. It's designed to see whether you've got the guts to hold on. Most traders fail the test. They grab the small profit, congratulate themselves, and watch helplessly as the real move unfolds without them. Have you ever sold too early, only to see the stock run exactly the way you thought it would? And on the other side, impatience makes men buy too early. They see a market that looks like it's turning, but they don't wait for confirmation. They don't wait for the tape to prove them right. They jump in, and more often than not, they're wrong. 1, 2, 3 times wrong in a row. Then they're discouraged, or worse, broke. The patient man waits for the market to declare itself. He doesn't try to guess, he lets the market show its hand. That's the difference between surviving and failing. Do you ever find yourself entering trades on nothing but a hunch, just because you couldn't wait for proof? Another thing about patience, it's not only about entering and exiting trades, it's about the whole career of trading. Men come into the market expecting to make a fortune overnight. They think 6 months of dabbling will make them masters. They don't realize it takes years of study, of mistakes, of watching the tape day after day. The patient trader accepts that this is a lifetime game. He knows he doesn't have to win today, or this week, or even this year. He has to survive long enough to catch the big moves when they come. That's where the fortunes are made. The impatient man wants his fortune now, and he burns out before the real opportunities ever arrive. How long are you willing to wait for the big move, or are you chasing pennies every day while missing the dollars? Markets are built to exploit impatience. Think about it, the tape moves up and down, jerking, shaking, teasing. It tempts you into thinking there's always something happening. but most of it is nothing, just noise, just the daily battle between buyers and sellers. If you jump at every twitch, you'll bleed to death from 1,000 small cuts. The patient trader doesn't take the bait. He watches the action, sees the false starts for what they are, and saves his bullets for when the trend is real. Do you fall for the little wiggles, or do you wait for the line of least resistance to show itself? Patience also means living with discomfort. A trade that's right in the long run won't always be comfortable in the short run. Prices don't move in straight lines. They back and fill, they shake out the weak hands, they test your nerves. The patient trader expects this. He knows it's part of the game. The impatient one thinks every dip is a disaster and every rally is the final top. He jumps in and out, and each jump costs him. Have you ever bailed on a trade because it made you uncomfortable, only to watch it work out just as you first thought? There's a saying I've always believed. The big money is not in the buying or the selling, but in the sitting. That's the essence of patience. Anybody can buy. Anybody can sell. But can you sit through the noise, the shakeouts, the opinions of others, and your own fear and greed? That's the test. Most men fail it, and that's why most men fail at trading. Sitting doesn't feel like work, but it's the hardest work there is. Do you confuse activity with progress, thinking that trading more means you're doing better? So many traders are ruined by the clock. They trade because it's Monday, or because the market just opened, or because it's the end of the day. They feel time passing and they think they must act to keep pace. But the market doesn't care about your clock. The only time that matters is when conditions are right. The patient man knows that. He ignores the calendar, ignores the clock, and waits for his signal. The impatient man lets time push him into action, and that action costs him. Have you ever traded just because it felt like it was time to do something? Patience, then, is more than just waiting. It's the ability to wait without frustration, without forcing, without second-guessing. It's a mental discipline. It means being content to do nothing when nothing should be done. And that, more than any chart or system or tip, is the real edge. It's the thing the 99% lack. They think the market rewards cleverness, when really it rewards patience. They think success comes from constant motion, when really it comes from knowing when not to move. Do you see now why so many fail, and why so few succeed? Traders confuse hope and fear, holding losers while cutting winners. That single line explains more broken accounts than any other truth I've learned from the markets. It sounds simple, almost too simple, but it cuts to the heart of human nature. A man comes into the market thinking he's rational, thinking he'll make logical decisions. But the moment money is on the line, the moment the tape moves against him, he isn't dealing with logic anymore. He's dealing with his own emotions, and those emotions betray him. Have you ever noticed how quick you are to take a small profit, but how stubborn you become when staring at a loss? That's the reversal of fear and hope, and it's why 99% of traders go broke. Hope is the most expensive emotion in this business. It costs more than greed, more than ignorance, more than bad tips. Hope keeps a man in a stock that's going the wrong way. Hope whispers it'll come back, just wait. The market can't go lower forever, so he waits, and while he waits, his small loss becomes a big loss, and the big loss becomes ruin. Fear, on the other hand, robs him of his profits. The moment his trade shows a little gain, fear tells him, don't lose it. Take it now before it disappears. And so he grabs the crumbs and leaves the real feast on the table. Can you see the irony? The very instincts that should protect him work against him. Do you do the same, fear your winners and hope for your losers? The correct way to trade is the opposite. You should fear your losses and hope for your profits. When a trade moves against you, you cut it quick, without hesitation, without negotiation. You don't give it time to grow teeth. But when a trade moves in your favor, that's when you give it room. That's when you sit and hope for more, because trends, once started, have a way of running further than anyone expects. Yet almost no one does this. The natural impulse of man is backward. He hates taking a loss because it means admitting he was wrong. He loves taking a profit because it gives him the satisfaction of being right. But the market doesn't pay you to be right. It pays you to be profitable. Do you trade for satisfaction, or do you trade for survival? I've seen men wipe out whole accounts because of hope. They watch a stock sink lower day after day, and instead of cutting, they average down. They add more, convincing themselves they're buying bargains, telling themselves the market must turn soon. Hope keeps them glued to the wrong side while their capital evaporates. And I've seen those same men sell out of winning positions too soon because fear got the better of them. They couldn't stand the thought of giving back a small profit, so they cut themselves out of a big one. Have you ever felt that itch to lock in a gain, only to see the market keep climbing without you? This reversal of emotions isn't just about money, it's about psychology. Man is built to avoid pain and seek pleasure. A losing trade is painful, so he avoids the pain by ignoring it, by pretending it isn't real, by hoping it'll turn around. A winning trade is pleasurable, but pleasure brings fear of losing it, so he cuts it short to lock it in. The brain tricks him, and the tape punishes him. The 99% never learn to master this instinct. They trade themselves into poverty because they let their feelings sit in the driver's seat. Do you see how your own instincts might be leading you to ruin? A trader must learn to reverse his natural impulses. He must train himself to accept small losses without hesitation and to let profits run without fear. That doesn't come naturally, it's the hardest lesson of all. It requires discipline, rules, and a steel will. It means fighting against your very nature. But that's the cost of survival. Most men never pay it. They go on hoping and fearing in the wrong places, and the market takes their money as tuition. Have you ever told yourself, I'll just hold a little longer, it can't go much lower, only to watch it drop twice as far? Hope blinds a man to reality. When you're holding a loser, the tape is telling you something. The market is shouting that you're wrong. But hope puts cotton in your ears. You stop listening to the only voice that matters, the price action. You cling to your opinion, to your prediction, instead of obeying the facts in front of you. And the market punishes disobedience. It punishes arrogance. That's why hope is dangerous. Fear, when misplaced, does the same. You see the tape confirming your trade, moving in your favor, but instead of listening, you fear the shadows. You imagine losses where there are none, and so you snatch at pennies while dollars are waiting. Do you listen to the tape, or do you listen to your emotions? The market doesn't care about your feelings. It doesn't know your hopes or fears. It only knows price, supply, demand, and trend. The successful trader learns to detach, to treat each trade like a number on a board, not a piece of himself. But most men can't do it. They tie their identity to their trades. A loss feels like a wound to their pride, so they hold on in hope, refusing to admit they were wrong. A profit feels like a trophy, so they clutch it too soon, fearing it'll be snatched away. And that's why the cycle repeats. Do you take losses personally, as though they're an insult, instead of just part of the business? Every great move I ever caught, I caught because I let hope work for me, not against me. I hoped my winners would go further, and I gave them the room to do it. And every great loss I avoided because I feared it. I feared being on the wrong side, so I cut it before it cut me. That reversal is what made the difference. The 99% never make that shift. They die by their natural emotions. And the market, being what it is, feeds on them like wolves feed on sheep. Are you willing to reverse your instincts, or will you remain food for the street? This business is cruel to the hopeful and the fearful, but kind to the disciplined. When you treat a loss as nothing more than a small expense, you strip hope of its power. When you treat a profit as something that must be given the chance to grow, you strip fear of its power. It sounds easy, but it isn't. It's the hardest battle in trading, the battle against yourself. The man who wins that battle joins the 1%. The man who loses it joins the 99. Which one are you preparing to be? Discipline, not brilliance, separates survivors from failures. That single truth cuts deeper than any theory or method ever written about the markets. You can be the smartest man in the room. You can know every chart pattern, memorize every statistic, study every company report, and still lose if you lack discipline. On the other hand, a man of ordinary intelligence, with no special knowledge beyond the basics, can make a fortune if he has the discipline to follow his own rules and the patience to sit tight when the market tests him. Do you think your knowledge will save you without discipline, or are you honest enough to admit that it's your habits, not your intellect, that determine your fate? I've watched men far brighter than me lose everything in the market. They could calculate ratios, they could speak eloquently about economics, they could predict trends with uncanny accuracy, and yet they ended up broke. Why? Because brilliance made them proud, and pride is poison when it isn't anchored to discipline. The tape doesn't pay you for being clever. It pays you for acting correctly when the pressure is greatest. When you're in a losing trade, it's not brilliance that gets you out quickly, it's discipline. When you're in a winning trade, it's not brilliance that keeps you from grabbing too soon, it's discipline. Tell me, have you ever known what the right thing was but failed to do it because you lacked the will to stick to your own plan? Discipline is the backbone of every rule worth following. Without it, rules are just words on paper. A man can write down that he'll never risk more than 5% of his capital on a trade. But when the moment comes and the stock looks so tempting, when greed whispers and hope sings, he'll break his own rule unless he has discipline. And once he breaks it once, he'll break it again, until the rule is nothing but a memory. That's why most traders fail. They can't govern themselves. The market punishes the man who won't govern himself. Do you keep your own rules, or do you bend them whenever the heat is on? Brilliance without discipline is like a fast horse without reins. It may run fast, but it'll run you straight off a cliff. Discipline keeps you in the saddle, keeps you from riding to ruin. I've seen men with less talent, less knowledge, and less experience outlast and outperform the so-called experts simply because they had the self-control to wait for their pitch, to cut their losses, to ride their winners. Survival in this game isn't about how high you can fly, it's about how well you can keep from crashing. And survival is impossible without discipline. Have you ever looked back at a loss and realized it wasn't ignorance that cost you, but simply failing to stick to your own rules? One of the hardest things discipline demands is the ability to do nothing. Most men can't stand inactivity. They feel the urge to trade, to do something, to justify their presence. But the disciplined trader knows that waiting is part of the job. He doesn't force action when none is required. He doesn't trade for the sake of trading. He trades because the setup is right, because the market has confirmed his judgment, because the odds are in his favor. The impatient man thinks discipline is weakness, but the disciplined man knows that sitting still is strength. Can you sit still when the tape is noisy, or do you let the noise push you into action you later regret? Another part of discipline is controlling size. Most traders lose because they bet too big. They let greed talk them into doubling up. They let fear push them into reckless revenge trades, and soon they're ruined. Discipline means controlling risk, no matter how tempting the trade. It means never letting a single bet endanger your survival. The disciplined trader thinks not about how much he can make, but how much he can lose. He asks himself, if I'm wrong, how much will it cost me? Can I live to fight another day? The undisciplined man asks, how much can I win? And that's the difference between being in the 1% and being buried with the rest. Have you ever staked more than you should have, hoping brilliance would save you from bad luck? Discipline is also about consistency. You can't follow your rules one day and break them the next. You can't be steady in calm waters and reckless in storms. Discipline means the same habits, the same principles, applied every single time. It means living by your rules no matter how uncomfortable it feels in the moment. And it always feels uncomfortable. That's the test. Do you treat your rules as sacred, or do you treat them as suggestions when temptation shows up? The market has a way of testing discipline more than intelligence. You can know the right side to be on, but the market will shake you with pullbacks and reversals. It will tempt you to second-guess yourself, to take profits too early or to hold losses too long. Only discipline keeps you steady. Without it, you're tossed around like a ship without a rudder. Brilliance won't save you in those storms. Only discipline will. Have you ever had the right call but lost money anyway because you couldn't keep steady when the market shook? A man once told me that trading was 90% psychology and 10% method. He was wrong in one way: he left out the word discipline. Because psychology without discipline is nothing. You can understand your own weaknesses, you can recognize your own emotions, but if you don't have the willpower to act against them, the knowledge means nothing. Discipline is what turns knowledge into action. Without it, you're just a man who knows better but does worse. Are you just aware of your flaws, or do you actually enforce the habits that keep them from costing you? The street is littered with men who thought they were too clever to fail. They could talk for hours about market theories, but when the time came to act, they lacked discipline. They overtraded, they held losers, they broke their rules, and they vanished. You won't remember their names because the market erases the undisciplined. The ones you do remember, the great operators, weren't remembered for brilliance alone.